All-time highs this year. I think we got to chop around a little bit in, 85 to 90, then back to 85, 93, 87, chop, 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 grind, grind, grind. Once we start closing above 100 and a lot of what I'm saying becomes real, all gas, no brakes. We're catching up to gold. We're going to blast through gold. This bull market has not even started. And we got all confirmation from our financial authorities. That's my humble opinion. It doesn't get any more legit than the guys running the country telling you on a podcast for free on YouTube. So my predictions remain the same. I think the local bottom is probably in. I think easing monetary policy. Listen, the only uncertainty that the market needs to get figured out is tariffs.
Jack Mallers has been making waves in the world of cryptocurrency, and his latest comments are no exception. As the CEO of Strike, Mallers has been at the forefront of Bitcoin adoption and the integration of digital assets into traditional finance. Recently, he shared his thoughts on the future of Bitcoin, the role of inflation, and how the current monetary system might be setting the stage for a massive shift in the financial landscape. Mallers claims that the growing strain on central banks and the development of financial systems will present an unparalleled chance for Bitcoin to take the lead. Mallers anticipates exponential growth and adoption in the upcoming years as institutions begin to embrace Bitcoin as a valid asset class. Bitcoin is at a turning point, and Mallers' viewpoint provides a distinctive look at how the virtual currency can influence our financial future. Take a moment to like this video, subscribe to the channel, and turn on notifications for more content on Bitcoin and the digital asset space. Also, drop your thoughts in the comments below. It helps with the YouTube algorithm and supports the channel. Thanks, and enjoy the video.
And I think the US, we're going to live through that, weirdly. We're going to live through highly inflationary times where real rates are negative, and Bitcoin should not be treated like Tesla stock. And I think this is the year it uncorrelates. I fundamentally believe that. I think that listen, I don't like speculating on the price because it's not what this show is about, nor do I think I'm going to be right. But I fundamentally believe that we have a much better chance of going to 250,000 than making lower than whatever the local low was, 78. I think Trump is getting what he wants out of the Fed. I think these guys are running out of time, by the way. The debt is too high. The debt is too high. You can't have rates this high when the debt is this high. Bessent's bill is going to be trillions of dollars. The debt is too high. We're trapped. The only way out is through currency debasement. Whose time and energy are you stealing? You're stealing those holding the dollar. How are you going to do that? Inflation and negative real rates. Sure. Keep your dollars in a savings account. We'll give you 2% interest and inflate it at 5%. We'll take 3% of the world's time and energy stored in dollars to cover our ass for all the debt we've accrued. I think, guys, those of us that tune into the Money Matters podcast and Mailbag Mondays, I think we might have been right. Since I last talked to you guys, the Federal Reserve has come out and said it's ending QT. QT stands for quantitative tightening. Tightening meaning tightening monetary policy, strengthening the dollar. They came out and said, we are putting a stop to QT starting April 1st. That's big, big, big deal. That's a sign from the Fed that they are easing monetary policy. Easing meaning they're making it easier to get money, easier to trade, easier to get a loan, easing access to capital. That, of course, is better for the economy. I think in the shorter term, Bitcoin will be volatile and probably to the downside because of some of these macro decisions that folks like the Federal Reserve, the Treasury of the United States of America, the President of the United States of America, because of decisions they've made. And then last week, I said, I think Bitcoin might be bottoming out. I do expect some positive words from the Federal Reserve. And I think the volatility to the downside will likely be ending. And I think Bitcoin might make new highs as soon as April and as late as June. Moving away from a strong reserve currency to a severely weak inflation plus negative real rates reserve currency, I mean, that gold and Bitcoin are going to fly. The only reason Bitcoin's not flying and gold is because Bitcoin is bucketed as a risk on asset. I think this is the year that changes. If these guys keep this up, if they keep this up, the Fed ends QT, I literally think Bitcoin is going to decouple from its correlation to the S&P 500, and it's going to go race with gold and outperform it. That's my prediction. I think 250K this year is still very, very much on. Very much on. The price action, we're not going straight to 250. I actually think chop is very healthy. Listen, you don't want to be teleporting to prices. You know, for me personally, I want the market to be sustainable. You know, dropping 30% from a local high and chopping around is great. I don't mind it at all. I expect a slight grind higher to 100. If we start breaking and closing above 100 again, this thing's going to fly. See ya. So I think Q2, we grind higher and potentially make new highs, and Q3, Q4 this year. I mean, one of the things Howard Lutnick literally verbatim said on this podcast is in Q4 of this year, the economy is going to be gangbusters. And it's like, the guy's telling you literally, like, he can't make it any more simple. It's like they're front loading all of the pain now and blaming it on Biden. And they're saying this thing's going to be gangbusters going into midterms. So like, it doesn't get any more legit than the guys running the country telling you on a podcast for free on YouTube. So my predictions remain the same. I think the local bottom is probably in. I think easing monetary policy. Listen, the only uncertainty that the market needs to get figured out is tariffs. We're supposedly going to get clarity on tariffs April 2nd. Nobody has any idea. I mean, based on Trump's Twitter account, it could be this way, that way, left, right, up, down. No one has any idea. As soon as the market gets clarity on that, I think it gets a little bit more stable. I think Bitcoin separates from the S&P 500. I think we're going into a inflation plus negative real rates. I think these guys are committed to re-architecting global relationships. The current fiat currency regime is over. It's ending. It's not sustainable. It's not.
Jack Mallers thinks that the fiat currency system is gradually collapsing. He notes that the U.S. government's expanding debt load and the growing hesitancy of foreign organizations to purchase U.S. bonds indicate to a significant change in the financial landscape. Mallers asserts that no nation can keep producing money to trade for tangible goods like food, metals, and energy without suffering dire repercussions. He contends that Bitcoin is set to replace the U.S. dollar as the primary global reserve currency as the globe gradually moves away from it. Mallers even ventures the audacious prediction that the market value of Bitcoin may reach $100 trillion in the future. Although that may appear extreme, this long-term vision is becoming more and more likely due to the quick uptake of Bitcoin and the continuous downfall of the currency system. We're about to dive deep into his insights, but before we do, make sure to subscribe and hit the bell icon to stay updated with our latest videos.
Besant talked all about long end, long end, long end, long end, long end, long end. What's the guy do? He issues at the short end. Listen, sometimes it's this simple. If he could issue at the long end, he would issue at the long end. He talked a big game. When he stepped up to the plate, he issued at the short end. Nobody wants our debt. Nobody's willing to finance this game anymore. This is not World War II anymore. It's over. It's over. Issuing a world reserve currency isn't sustainable. You cannot give the rest of the world a piece of paper you pooped out of your butt in exchange for real stuff like metals, like food, like oil, like gas, like energy. The world is fed up with it. They don't want your stupid, stinky dollars anymore. They don't want your debt. It's over. And we're re-architecting an entire new system. Bitcoin to 100 trillion. I mean, we've been following this trend for a while. Near-term volatility, we saw Bitcoin dip into the 70s. We're already back to 87. I think we'll chop around, but I think we grind higher from here on out. I don't think these guys have much time. There's just too much debt at the end of the day, right? Like, people love drawing like, oh, but what about in the 1970s? What about the Volcker Fed? Well, it's like, yeah, but they didn't have $36 trillion of debt. So I don't think these guys have that much time. I think they got to start pulling levers. They need liquidity. They need a weaker dollar. They need real rates negative. And so I think we'll get some form of QE immediately. Like classic, like Jerome Powell coming out and saying QE. I don't know if we'll ever get that, or especially not in the near term. But engineered inflation, engineered currency debasement, soon. They don't have time. I mean, the debt to GDP has to come down. I mean, one of the interesting things Bessent said on this podcast of his, he said straight up, Elon's got to chill out. Elon's got to slow down. I mean, he didn't, those are my words. What he did say though is, like, in order for me to land this plane safely, our timing has to be right, I think is what he said. But we cannot cut this many jobs without lowering the debt to GDP. He's like, so anyway, I think that there's no time. All-time highs this year. I think we got to chop around a little bit in, 85 to 90, then back to 85, 93, 87, chop, grind. Once we start closing above 100 and a lot of what I'm saying becomes real, all gas, no brakes. We're catching up to gold. We're going to blast through gold. This bull market has not even started. And we got all confirmation from our financial authorities. That's my humble opinion.
According to Jack Mallers, there is not much time left for the U.S. government. He contends that it is hard to address economic issues in the same manner as in the past due to the size of the national debt, which is currently over $36 trillion. But Mallers notes that those periods were not burdened with the extraordinary debt levels of today. Policymakers, he says, are running out of practical options and will have to start pulling levers to prevent a disaster. Mallers argues that in order to lessen the burden of debt, the government requires negative real interest rates, more liquidity, and a weaker dollar. He also thinks that we will see some kind of QE in action, which he refers to as engineered inflation and engineered currency debasement, even though the Fed may not immediately declare an official fresh round of QE. Despite not being called QE, these covert maneuvers will behave similarly. Additionally, Mallers cites a recent podcast in which economist Luke Bessent likened the current state of affairs to attempting to land a plane amid turbulence. You have to time it just. However, Bessent stressed that without adjusting some factors, the government cannot lower the debt to GDP ratio. Mallers points out that revaluing gold on the government's balance sheet would be among the most drastic but feasible actions. The official price of gold remains $42 per ounce as of right now. Don't forget to like, subscribe, and enable notifications for more valuable content, and as always, happy investing.